All right, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays. It's not like I have anything better to do on a Saturday night than sit in the bunker in quarantine and bring you another live stream. And this one is going to be a little bit special. And let me just pull out your live chat. Everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays. Clearly, I forgot how to do streams. All right, let's pop out the live chat. Let's close that link. We'll put this here. We'll put that there. And I am good to go. All right. Am I going to talk about the old charts? I already see views. Maybe. I need to put together some old charts. So the last couple of weeks, I've really been, trading all day long. And it's good. And oh man, I want to do some research. I really want to do some research because I got my hands. I didn't look at these books closely enough, but I am, so this just came in the mail, finally, okay? So I finally got my Hyperwave book, Tyler Jenks, Tyler Cotis, which is Socrates, and of course, Leah Wald. I am mentioned in here somewhere. I haven't looked through this yet. I'm looking through it for the first time. And yeah, it's going to be great. I can't wait to read it. I'm going straight to the back and look at some acknowledgments. Really cool. Hey, there are pictures right there. So I just got this book. I'm going to order another one. So I'm actually going to read a book for a change. I'm going to read it. And then obviously it's going to not look brand new anymore if I start reading it. And then I'll have to buy another one for Leah and Socrates to sign. All right, why am I out of focus again? Let's put me in focus. All right, I'm in focus now. All right, I see people in the live chat. Leah, you're in the live chat. I know you're out hiking with Thor. Otherwise, it would be awesome for you to come and join us. All right, Bitcoin Motorist is in the chat. Fiboswani is in the chat. Okay, so I actually have, so Tyler's son sent me one of his boxes. And here's what was in the box that I really, really wanted. And that was this. This is, look at the date, 1980 by Larry Williams. This is sequential, the same sequential that I use today. And you can see property of Tyler Jenks. And here it is. The original work that I'm not going to share all of it, but trying to find a good page. Boom. Each page is like copyrighted property of L26. So Tyler was the 26th person, maybe not 26, I think it went 82, but Tyler was one of the first people to learn the sequential system. And here it is. Hold on, let me see if I'm on full screen. Whoa. I guess the green screen isn't doing much justice here. There it is. All right, that's the sequential, the setup to a 9, and then a move to a 13. And this is from 1980. Larry Williams, 1980. If you Google the history, him and Tom DeMark put it together, though I don't see DeMark being mentioned in this document at all. I actually really want to go through the document. This is the original work. And then there was a part 2 in 1981. And Tyler attended this workshop as well. So these were the technical analysis workshops that Tyler Jenks was attending, you know, back in the late 70s, early 80s. The man really knew everything about technical analysis, pretty much everything. And yeah, here it is. Sequential 2 schedule right there. He was there. He was there. Paid thousands of dollars back then. So it's great to get your hands on some of these 1980 original documents. Now, I also have this book, and I was looking through it today, and it's really interesting because it goes year by year. Like this is 1900. This is the year. This is what I'm really interested in. 1900 to 1909, because the events that took place from 1900 to 1909, and they're all right there in print. The events and all of like the economics that went on, and these are like the economic factors. Everything that took place from 1900 to 1909 was the reason for the creation of the Federal Reserve. The panic of 1907 was the main catalyst for the creation of the Federal Reserve. And that brings us to 1910 to 1919, which was interrupted by World War I. You see the gap in the charts right there. You see that gap right? See that gap right there? That's the interruption of with World War I. And that, of course, brings us to the 1929 crash. And you see that crash right there in the corner there. And then the aftermath. But what I am really interested in is the history, like all of those little writings right there, right? This is what actually went on. Like, for example, February 15th, 1929. Whoa. February 15th, 1929, Federal Reserve favors curbing stock speculation. October 23rd, 1929, Dow Jones down 6.3% on 6.4 million shares. So these are all like the little tidbits. And that brings us to the aftermath of the 1930s. And again, was the Congress in the 30s smarter than the Congress now? Like, what did they do? And that brings us to right here, 1937, SEC presses criminal charges for the first time, you know, against the financial crimes, and it's all here. 1932, liquidity squeeze on the U.S. banking system. March 5th, 1933, Roosevelt declares bank holiday. By the 29th of March, 12,800 of 18,000 banks had reopened. U.S. goes off the gold standard. April 19th, 1933. So I guess the anniversary is coming up soon. So yeah, so it's really great. So it's all right here. And I would love to turn this into like digital form. I'm sure all this stuff is copyrighted. So really cool stuff. And there it goes decade by decade all the way into 2004. So I wish there was an update. And then there is this book also from Tyler Jenks. I have his other stuff as well. And this actually takes us to 1885. And it's not as fancy looking as the other one, but Really interesting stuff in here as well. So here's a chart. Here's a chart of 1885. This is, what is this? What's the asset? 14 stock average, 12 railroads, and 2 industrials. Oh, wow, this is great. If I can do this in trading view, right? This is literally, this is like what the Dow Jones was in 1885. And I have it right here. So again, Tyler's work is, or Tyler's historical charts from back then. Here's 1885, here's 1886. Wow, it goes year by year. Here is 1914, the stoppage. It's like a lifetime of research that would need to be done here. But this is great. Why are there 2 things here? Oh, they split them. Interesting. So here is the industrial average, and above it is the rail average, because those were the big industries at the time. And that is, wow, really cool stuff. 1904. Yeah, there's no like events listed, but at least I have the raw numbers that could be used. Oh, this is broken up by sector. As we get into the 1970s, I have industrials, transportation, utilities, and bonds. Yeah, a lot of stuff to get through. A lot of stuff to get through. All right. Did we pause? No, we're good. So these are just some of the books that I have from Tyler Jenks. I also have like his Hyperwave stuff. This is, what is this? I think this is actually, oh yeah, this is more charts. Graphics of stocks from 1960. This is individual charts. They go from 1929 up to 1960. So it looks like this thing was published in 1960, because all these charts end in 1960. Yeah, so a lot of good stuff. And then this is his Hyperwave stuff that was used in the book. And last one. Oh, this is also his Hyperwave stuff. There was one more. There is one more folder. I don't know where it is. Anyway, I think it's time to look at some charts. All right. Do we have any good questions to kick us off with? Did you know Anthony C. Sutton's book about the Fed? No, I'm not familiar with that book. Let me see if I have like a huge library of books. Let me Google and see if I have that book real quick in my own. So Sutton. I don't think so. I don't think I have it. I have to look. I'll have to look it up. I have to remember that one. All right, let's go to screen share. Let's look at the charts. Does the Fed policy put the S&P and Dow into phase 4 in the coming months? I don't think it's in the coming months, but I think it's in the coming years. Let's go to screen share. Where are my charts? All right. So I don't think I have the Hyperwave opened, but we're going to go and take a look. So there are several books about the creation of the Fed. So the famous book about the creation of the Fed was, of course, G. Edward Griffin. There he is, G. Edward Griffin Fed book. Okay, so come on. I'm just gonna go straight to images. Okay, so that's the creature from Jekyll Island. Okay, a little bit too much conspiratorial. I've listened to the book. It was hard for me to get through that entire book. To me, this book was more like, I have this conspiracy theory and I'm going to write a book in order to portray it onto the world. So you are talking about a book by Anthony C. Sutton about the Fed. Okay, the Federal Reserve conspiracy. So I wonder if this is the anti-Federal Reserve conspiracy or more conspiracies on the level of creature from Jekyll Island. Because if you want a second opinion on the creature from Jekyll Island, I recommend you read this. And for that, we're going to go over to my blog. So of course, if you go to tonevays.com, please check out the affiliate page. But after that, if you go to blog and you look for Fed, right here, I need to make this a standalone. I also need to put together more articles. So if you just do a search for Fed, you get this anarchist interview on the Fed. I mean, you don't have to listen to the interview. It's an old interview that I did with Jeff Berwick back in the day, who I don't really associate with these days. But these are all links from Martin Armstrong, who has not written a book about the Fed, but he's written enough like articles about the Fed that could be a book about the Fed. And he has a very different viewpoint on the history of the Fed. And I mean, he's like in his 70s now. So he was, started trading back in the 50s, 60s, and researched the Fed quite a bit. And he had very different viewpoints. So here, Federal Reserve Part 1, Creature from Jekyll Island, where he basically accuses that book of being a conspiracy theory and talks about, why and how the Fed was actually created. So I strongly recommend you guys read these old articles from Martin Armstrong, the entire series on the history of the Fed, and it will probably change your mind a little bit. I'm not saying the Fed is good, but it's different than a lot of the conspiracy books make it out to be. So you really want to check these out. These were written in 2015. I remember reading them. This is before. I was already in Bitcoin back then, but I was still reading his blog quite often. So I really enjoyed reading about the history of the Fed in this series. So this is part 1, and then there is part 2, part 3, part 4. So he did like a 4-part blog series on history of the Fed. They're a little long. Well, this one is kind of short, but they're very, very good. Very, very good. Very, very good work. So this book, no, I'm not familiar with this one. I'll check it out. Maybe I can get it on tape. But yeah. Tone, please consider digitizing Tyler's material. I would love to analyze this, willing to pay for it. Look, it's not about the money. Like, I wouldn't sell it. It's about time. I have to find the time to do it. All right, let's go to the charts. So let's actually pull up the Bitcoin Hyperwave chart in honor of Tyler. If anyone has that book, I think I have the Creature from Jekyll Island, in PDF form. If anyone has this book and wants to shoot it over to me, go for it. But I'll probably just buy it. All right. I need to see what I can do, right? This is my chart of Dow Jones, if it ever loads. Let me make the screen bigger here. Remove the bookmarks. And maybe I can just draw in lines right here. Maybe I can just zoom in and like draw in like the backdated history going back to 1985 because I have the data. So I can just draw it backwards. I really wish TradingView had a feature where I could like insert data into a table and it just draws it for me on the back. But maybe if I zoom in enough, I can just, go like this and put in some of these lines like, like that, and like just, draw in the backdated history going all the way back to 1985. Though you won't see any dates, which would be a challenge. But anyway, I'll see what I can do here. I remember putting this chart together for a presentation. I should do this presentation one more time. When the market makes a new all-time high, I'll go back and redo this presentation. Okay, Hyperwave, that's where we were going. I should see if Socrates is free. Let me text him. All right, here's the Bitcoin Hyperwave. Now, I have somewhat, I don't want to say debated, but I have discussed this with both Tyler and the other Tyler, being Socrates, who is Tyler as well. Tone, how do you remove emotion from trading? It's a very good question. It's a very hard question to answer. It's difficult. The way I remove emotion from trading is sometimes I don't do directional trading. I do direction neutral trading, and the only way to do it is with by finding an arbitrage strategy, by finding a strategy that you can code, or by utilizing direction neutral option spreads that I do teach in my options course, which are, straddles, strangles, iron condors, butterflies. And for more on that, and I do need to teach that options course one more time, and it's not cheap. And but here it is on sale. So it's, if you're going to trade directionally, it is very difficult to remove emotion. Yeah, did I hear that Bitcoin.com is is firing 50% of their labor force? Yes, I tweeted about it, and I tagged my friend Dinesh, and I also sent him a link to for Kraken to fill out a job application. But no, Dinesh is fine. He wasn't let go by Bitcoin.com, but I did troll him a little bit. Yeah, I'm aware. Okay, so the challenge is there's a little bit of a question as to where to draw phase one. For me, there was. Now, the obvious place to draw phase one is above the prior all-time high, which was back in 2013. So that means that puts your phase one, because that was the, oh wait, this is the monthly chart. Why am I on a monthly chart? Hyperwave is supposed to be drawn on a weekly chart. I don't know why I'm on a monthly chart. So on a weekly scale, that line is lower. No wonder it was lower. So here's the weekly scale. Oh crap, on a weekly scale, we topped on a 9. God damn. Wow. Sequential. Did it again. Tops on a 9 in the 2013 bull market. So there's your phase one of a hyperwave. And in fact, if I just draw it a smidge higher, phase one holds right here in January of 2017 as well, which ironically also tops on a weekly 9. Jesus Christ. So here we are. That's phase one. Now, Tyler said that we did not really have a hyperwave back in 2013 because the phases didn't really last long enough, or maybe they did, but we never made it back to phase one. Remember, phase one would have been challenging, right? Because it's hard. If we go to a hyperwave here, phase two didn't last very long. And then you have a challenge with phase one, you know, so it was a little bit tricky. '17. So we do have a little bit of a challenge with where to draw phase one, because the reason why I like my phase one a little bit lower is because it gives me a much cleaner phase two. So here's the phase two. Now remember, phase two can't close, you can't close below this purple line. So that's the best I could draw phase two. That gives me a very interesting phase three, which some people draw significantly higher. I mean, some people could have drawn phase three connecting this point and this point and that point, and then you go into phase four. Now, I also felt that is it possible that phase six was down into February, but Tyler was very adamant that phase six has to be very short. Phase six can't really last as long as phase four. It has to be very short and quick. And here's phase seven, and phase seven is still with us. And this is phase two of on my end, this is phase two. And we keep coming dangerously close to hitting phase two, but we never did. Now, I don't believe that we will. I am of the belief that we are not going to hit this purple line, because that means we're going to go lower than 3,800. And I already made a bet with Socrates and Joe Saz that we're not going to go below 3,850, and they both think that we will. So I have become the bigger bull, even amongst my friends. I am, so someone is asking me, are you expecting 1,200? No, I'm not. I'm not even expecting 3,800 at this point. I think from here, we go higher. I think this was enough capitulation and it was enough pain to reverse us. Now, I read somewhere the other day that Novogratz, I mean, I'm sure he didn't mean it, but there's a quote from Novogratz, and I hope he wasn't misquoted, where it said Novogratz would quit the space, quit the Bitcoin side of the space, if Bitcoin is not over 20,000 by the end of the year. I don't believe Bitcoin will be 20,000 by the end of the year. I think Bitcoin will barely be above 10,000 at the end of the year. But I also don't believe we're going below this low. I never liked how this bottomed. There was never a wick. There was never a flash opportunity to get in. If we go back, we're on a linear chart. If we go back to here, look, there was like a flash crash, and you had to get lucky to get into Bitcoin under 200. And then just when you thought you did not have a chance to get back into Bitcoin under 200, you had another chance to get into Bitcoin under 200, but it wasn't a big chance, right? So right here, the low was 198.72, and right here the low was 998.38. So you literally had about 5 minutes this week and 5 minutes that week to get in. Now, some exchanges did drop to 160. I remember that very, very clearly, but not all of them. Some exchanges never dropped under 200. This is what I'm looking for. This is what I'm looking for. We did, like, here's one more, right? Here's this wick down, and that was the last opportunity someone had to get into Bitcoin, right? Because right here, that's substantial. So here's your accumulation. Let me do this. That is $105, which represents 17%, right? So where is this line? Let me grab this and lower it. Where is that line? That line is at 500 and let's say 550, 550, right? So you only had one day to get into Bitcoin under 500. And then you never even got close. Bitcoin was never close ever again. It's these final wicks to the downside that people say, hey, it just flashed down there. It'll do it again. It'll do it again. And I'll get in. And look what happened. Never even came close. Never even came close. We didn't have it here. We never had it. That is why when we were rising here back in March of last year, I was very, very skeptical because we never had this. This is what I was looking for. This is how markets bottom. The only other way how markets truly bottom is a long, depressing consolidation. And that's what we had back here in 2015. We had a long, depressing consolidation. And even that long, depressing consolidation had these wicks. So it was like a double whammy. That is how markets bottom. So I believe we have bottomed. And I'm not basing that on on-chain volume. I'm not basing that on, mining activity. I wish I could base it on shitcoins dying, but I'm not basing it on that. I'm not basing this on any fundamentals. I'm not basing it on the halving. I am strictly talking one thing: the shape of the candle. It all goes back to the shape of the candle. The shape of this candle is telling me the chances are we have bottomed. And I would be surprised if Bitcoin even goes below this. What is this? This is 5357. I would be surprised if Bitcoin goes below this. Now, do I think we're going to break this line anytime soon? No. There is a good probability we're going to, just consolidate in one of these symmetric triangles that you could probably extend all the way to here, like that. I can see that, consolidate, and look where the tip is going to be all the way next year. So it's possible that Bitcoin will never be above $10,000 at any point this year in 2020. And when the year is coming to an end, the price of Bitcoin will be exactly what it is right now. That is my most likely scenario. That is my most likely scenario. Okay. Oh, I can extend this line right to there. That looks perfect, doesn't it? So that phase 7 is still gonna be, I can even draw it this way. I like my lines to touch the maximum number of points without, I could draw it this way. Boom. That's the line. That's the line that's touching the maximum amount of candles without breaking their bodies. 1, 2, 3, 4, 5, 6, 7, 8. 8, 9, 10. I'll call that 11. If I draw the line thicker, can I? Boom. There. So it's possible this line is going to reject it again and again and again until we finally break it early next year, continuing to demoralize people the rest of the year. Can you imagine how many people are going to start to panic if Bitcoin is sitting at $6,500, lower than it is right now, going into Christmas? Can you imagine how many people are going to say Bitcoin is going to die, mining is dead, you're only mining 6.25 Bitcoin, how are miners going to survive? Miner break even is $8,000 and the price of Bitcoin is 6. Who knows when the Mt. Gox people are going to sell their 240,000 Bitcoin? Like, there is lots of pressure still on Bitcoin. And having said that, the smart money will be buying it up off of this green line. That's how I see the future. That is why I'm bullish. That is why I believe the low is in. And this has nothing to do with fundamentals. I'm looking at these two weekly shadows or wicks, and that's what's telling me the bottom's in. All right, we got any good questions here? Oh, am I expecting a 1,200 government check? I'm expecting it. Hopefully I'll get it. Is that the real altcoin daily? Can we get a verification on that? I want to verify. Hold on. It's loading. Hey, you guys are doing a good job over there. Novograd said if Bitcoin doesn't 12K to 14K and or start pushing towards 20K by end of year, he will have to turn in his Spurs. So he implied he'd have to give it all up. What happened? Did I lose you guys? Did I lose internet? What happened? Am I still streaming? All right, let's do a check on this. All right, I think I'm still streaming. Let me check. What's going on? We're back, right, guys? Yeah, we're back. All right, yeah, we're back. Let me go back to screen share. All right, so yeah, well, it's similar to what I said. Can Bitcoin double? Can Bitcoin go to 12 to 14K in the next 6 months? Well, according to my outlook, it would be difficult. I don't believe that it will. I think we will be, again, I have a bet. I have 2 bets now. So I have a bet where I'm bullish and I have a bet where I'm bearish. And I think I'm going to win both of those bets. So I have a bet that says we're not going to even trade below 3,800. And I have another bet that says we're not going to be above 10,000 more than 90 daily closes this year. We had about 6 daily closes this year above 10,000. So, and I win the bet if it's less than 90. Oh, thanks. I'll change the title. I wonder if I can edit the title while I'm live streaming. Boom. Okay. Any other good questions? Thanks, Bitcoin Motorist, for getting me the questions. Tone needs a haircut. I do need a haircut, but I can't go to my barber. Can't go to my barber because I'm in quarantine and I'm lazy. I've been shaving my face, but I'm lazy about shaving the head. I gotta start wearing hats again. Okay, so let's take a look at the S&P 500 and maybe throw a hyperwave on that. So, or maybe the Dow Jones. I should start looking at the Dow Jones more. Dow Jones is the leader. Dow Jones has always been the leader. Let me pull up a Dow Jones chart. We'll do a hyperwave on Dow Jones, not S&P. So let me see if I have a Dow Jones chart. Okay. INDU weekly. Let's see what that looks like. Well, when did I look at it? Oh, it's been a while. It's probably a very old chart. I have to redo my own indicator here. What is this? What is that? DJI versus, what is that? Is that transports? Oh, that's the ratio between Dow and transportation. Okay. Oh, wow. That ratio is kind of steep, isn't it? This is Dow divided by the transports. Interesting. What does that tell us? What does that tell us? I wonder. I wonder what this means. And this chart doesn't go back very far. Why does the chart only go? Is that when the transport started? Interesting. Okay. Oh, I'm not going to look at this yet. Let's bring this back. I have to put the new indicator on. Put the moving averages on. I don't know why I can't favor stuff. My invite-only scripts. So here's the weekly chart. And let's see what Hyperwave tells us. I don't think I need these Fibonacci's anymore. See, here's that 1987 crash. How far back does this chart go? It goes to 1915. That's the same one that I'm using. Is there a better Dow Jones? Let me see. Is there one with further history? Let's do INDU. No. Let's try Dow Jones. I'm going to put this to index. Dow Jones 30. How far back does that go? Not very far. Let's try. I just want one with the furthest data back. Oh, this is Dow Jones Transportation or Tran. Nope. Dow Jones. Oh, that's the transportation average. I just want to see how far back it goes. 1998, that's not far at all. Dow Jones. What is composite? Only goes to the 70s. Yeah, it looks like it'll be DJI. Germany. I don't have an option to take me back further. That's all I have. That's okay. We'll use DJI. So let's see what we can do in terms of Hyperwave. We have to be on a linear chart. I'm sure this is in Tyler's book. We're going to draw phase one. Probably to here. If you hold the shift key, you can draw a horizontal line in TradingView. So phase one can't close above anything else. Perfect. That looks good. Like to draw nice thick lines. Here comes phase two. You know, I'm going to take off the magnet. Phase two is pretty good. Very clean. Cleanish. I like this phase two right there. Okay, holding. You're not closing above anything right there. Nice phase two. We'll make it green. And we can extend phase two indefinitely, right? To see if phase two ever gets broken. Came close to phase two right there. And I don't think we're going to come very close to it. Now comes the tricky part. This is probably just phase 3. And this week is a bit problematic. If that's phase 2, then the dot-com bubble was never really in a phase 3 because it got broken in right here during the financial crisis. So this is potentially phase 3. And what that means is we really can't have a lower close. That creates a bit of a challenge for the Dow Jones Industrial Average. This is a very good phase 3, but I don't want to lower it. And I'm a bear of the stock market going into next week. So if the Dow Jones closes lower, this becomes a serious problem for phase 3. But right now, your phase 3 is literally this, which is a pretty clean phase 3. You have 1, 2, and then 3 touches. And potentially, we will be staying above this line into, let's say, 2023, 2024. And then it's going to get wild. Then what you will have is a true phase 4, probably sometime in, I don't know, maybe 2026, that goes like this. Oh boy. Imagine this. So this is what the stock market potentially is going to look like. And this will probably top, yeah, 2032 sounds about right. And if you go back to this chart right here, I am expecting the ultimate top in the Dow Jones at least 75,000 around early 2030s. And that's probably when everything finally collapses. I think that's when the US monetary system finally breaks. That's when the dollar breaks. And this is a potential future. So we got a good 10 years to go. I think the market is kind of slow down and we're going to tread water. But then from maybe it'll be later. Maybe it'll be like this. Maybe it'll start in 2028. You know, we'll go up. And then we go from 40,000. Yeah, from about 30,000. And we just go straight up. I'll end it at 100,000 in 2032, like that. Boom. That would be your hyperwave. And then the US basically ceases to be a superpower. But we still have 10 good years, especially if a market is going to do that. So what percentage move is that? That is, well, that's not that much. That's only 200%. That's actually not a lot. That's 200% in 3 to 4 years. That is very reasonable because if we go to the NASDAQ, now remember, Dow Jones is only 30 companies. 30 companies. So it'll be very interesting. But It's going to be 30 very different companies by 2030. Because I think a lot of the companies in the Dow Jones by 2030, they won't be in the Dow Jones no more. Maybe I should do this with the S&P. Let's go to the NASDAQ. NDX, just NASDAQ 100. Not the full NASDAQ, but the NASDAQ 100. Maybe I should do the full NASDAQ. I'll revisit these charts after I read the Hyperwave book, guys. I like the NASDAQ better than the NASDAQ 100, though this did top at 5,000. Where's the rest of my data? Hold on. Make a copy. NASDAQ. Maybe I have the full NASDAQ. Hold on, let me check. Oh, I do. NASDAQ Composite, NASDAQ Composite Bubble. This is probably it. NASDAQ Composite Bubble is probably my Hyperwave. Oh, no, this is part of my presentation. This is my presentation. This is the inevitable ICO bubble presentation chart. Okay, no, I can't draw on this. But it does have bigger history. So we do have to go to the NASDAQ, not NDX. Okay, now I know. So we're going to close this. That's a good chart. Low chart layout. NASDAQ. NASDAQ versus Microsoft. NASDAQ Composite. Why are these different tickers? This is NASX and this is IXIC. Well, which one is the right one? Which one gives me more data? Hope I'm not boring you guys. Again, it's the old indicator. We can remove it. Put the latest one on. Okay, I have some things drawn on here. My old drawings. Oh, this has hyperwave lines. Beautiful. Let's go to the weekly chart. Let's drop the moving averages. Yep, there it is. There it is. Let's drop sequential as well. Well, for these long-term views, I'm gonna, you know what? Oh, here's a new feature for the people that ask. You can remove all countdowns if you don't like them. So we can remove all countdowns, and we're also going to remove the setup. And yeah, I don't need the trend line. I don't need the risk line. I don't need the intersection. Just remove all that. Beautiful. All I have is the 9s. That's it. All the 13s are gone. So here is the hyperwave. And I don't like this phase 1 at all. Because, and what is that line? Oh, that was me showing how far we were off. I wonder, well, what is that line? Oh, that's the new phase 2. Interesting. All right, let me see what's going on here. The hyperwave on the NASDAQ is challenging. it feels like phase one is too high. Though maybe not. We now have a new phase two. And we now have a new phase three. Look at this gorgeous phase three that is still has not been touched by the NASDAQ. Also, beautiful 9 right at the top here and a 9 right at the top there. It says a red 1, but that's because it was a 9 that turned into a red 1 by the time the week was over. So sequential was able to call both of these monster tops. And going back to this hyperwave, it never reached to phase one because I believe the internet is a new technology like Bitcoin. And that's why I don't think Bitcoin will make it back to phase one. So the original phase two would have been lower. This is the new phase two. That's phase three, that's phase four. So why did I go to the NASDAQ again? Oh, I wanted a NASDAQ to see the current situation. And you can see how the NASDAQ is still holding up very, very well. And I believe that by 2032, the stocks in the Dow Jones, a lot of them are going to be, I don't know what that is. A lot of them are going to be from current NASDAQ. You know, what are the stocks in the Dow Jones? Current Dow Jones members. What are the Dow Jones members? You know, this is probably going to be harder to figure out than you think. Let's see if Wikipedia has it. Beautiful. There it is. All right, let's look at the members and see how many of these are tech companies. 3M, no. American Express, no. Apple, maybe. See, Apple is more of a retailer these days than a tech company. Apple hasn't really innovated any tech in a decade. So they're more of a retailer now. Boeing, no. Caterpillar, no. Chevron, Cisco, Coca-Cola, Dow Inc. Wow, really? Okay. Exxon, Goldman Sachs, Home Depot. Yeah, I guess. IBM, they're a tech company. They're on the New York Stock Exchange, not on NASDAQ, but they're a tech company. Intel, they're a tech. Intel's obviously a tech company. Johnson & Johnson, JP Morgan Chase, McDonald's, Merck, Microsoft, they're still tech. Nike, Pfizer, Procter & Gamble, Travelers. Wow, didn't see that one coming. United Health Group, United Technologies, not familiar with United Technologies. Verizon, Visa, Walmart, Walgreens, Walt Disney. Okay, so what do you think is going to happen in 10 years? Am I the only one that sees the tech and the robotics revolution? You know, Google, not here. Social media, not here. Electric cars, not here. You know, sharing economy, the Ubers, the Airbnbs, not here. Okay, so 3D printing, maybe in the next 10 years will amount to something. What else? Literally robotics. Maybe Boston Dynamics will go public. Okay, so you have 10 years for a lot of these companies to be replaced by more modern tech companies. Okay, maybe Bitcoin mining. Who the hell knows, right? Who knows? And I see the robotics revolution coming, and it will be reflected in the shares of those companies. Maybe something new will get innovated, right? So we'll see. We'll see what happens. But this is interesting. Okay, this is an interesting list. Okay, let's go back. Oh, so I still don't know which is the better ticker. IXIC. How far back does my data go? Data goes to 74. I think that's a good one. I don't want to test it on this. I can test it on this. So NDX, the data doesn't go very far. It doesn't take me into the 70s at all. Takes me to 88, 85. It does go through the 87 crash, so it's close. This data takes me to 74, 73, and this data takes me to 86. So I got 13 extra years, but that's NDX. So NASDAQ. This is the one I have going to the 70s. So what's the other ticker? Was it ICX? No. What was that ticker? What was the other ticker? I don't think you can go older than the 73, right? I mean, there really was no tech sector. So I'm pretty sure it's the best ticker I can use. Apple is a tech company. They developed the iOS operating system. Yeah. Hold on. What sector is Apple in? I heard Apple was being reclassified as no longer being a tech company. It's not their main business anymore. No, but it's a tech company. They have to innovate something soon, though. I'm always surprised Apple has such a high share price. All right. Hey guys, I think this is it for me, to be honest with you. I kind of want to take a look at the big picture. I know somebody asked me to look at the gold Dow ratio. I don't know if I have that chart. I'd have to make it. I have gold silver. I have Bitcoin versus gold. Haven't looked at that in a while. Dow gold, I have it. I haven't looked at it since 2017, but I have it. Ah, look at that. Invalid symbol. Jeez. Yeah, that's how old this chart is. So this is, so we need DJI divided by GC1. GC1 explanation point. all. And we're going to do this. Boom, there it is. I'd love to throw sequential on this. Wow, talk about old settings. Okay. How do I? How do I get rid of those lines? Oh, appearance. Let's go to sequential. Let's get rid of this. None. Hide that, hide that, hide that, hide that. Boom. Takes me back to the 70s. Beautiful 9 right there at the top with the ratio. So, wow. So in 2011, this ratio got very interesting. That's when gold made its high and the Dow was still at the low. Back in 2000, the Dow made its high and gold made the low. So it looks like we've peaked at 21 on the ratio. And I don't know what conclusions we can really make from this. Other than if you see a 9, you see it was a 9 right there, giving you a buying opportunity. You missed it. 9 here, 9 there. I mean, I don't know what this tells us. I'm curious what count we're on, though. What count are we on? We're on an 8. Oh, next week. Next week. Next week, we're getting a 9, guys. We're going to get the 9 next week. It'll certainly be a 9, right? Because 8, 7, 6, 5. That's where it closed, right? So, I mean, this ratio would need to go up like 30%. You're getting that 9. Oh, interesting. I actually want to bring the countdown in. This is interesting. We had our 13 from that 9. That's what I was watching. How close are we on the combo? There's only one left. One more. One more. It's all coming next week. All the 13s and the 9 combo 13. If we close at a new low, we need a close lower than current close. I think we're gonna get it. So get ready for the low in the markets next week. This could be interesting. That's a big drop. That's 50%, guys. That doesn't happen often, does it? That doesn't happen very often. Well, take that back. I stand corrected. 86%. Wow. Wow. Big move. Did take a decade. Oh yeah, I forgot about Bitcoin. What's going on with Bitcoin? We talked about Bitcoin Hyperwave. Here's the daily Bitcoin chart. See, still favoring the bulls. Favoring the bulls. All of this is favoring the bulls. All the oscillators are favoring the bulls. Our candle flipped. We're sitting right at the resistance line. Remember, I'm still expecting a bit of a pullback because I think the markets are going to open and start to drop Monday or even Sunday night, tomorrow night. So I'm not ready for a breakout yet. It can happen. It would be interesting if this makes it to a 9 and then pulls back, which is also possible. Also possible, right? I mean, at this point, I mean, this is always a fluid situation. I can move this over by a day. I can move this over by a day. And I can move this over by a day. I think this is how it was originally. I think I moved it to the left and now I'm moving it back to the right. Okay. Now people are talking about a descending triangle on the 1 hour chart. I saw it in my chat and I saw it across my Twitter feed as well. The 1 hour descending triangle chart isn't, I mean, it's not that significant. Well, if there was a descending triangle on the 1 hour chart, it no longer is. So that's over. So this would have been it. I mean, this would have been your descending triangle, right? But that's over. You can't adjust this at this point. You could. I can adjust it. You could. You could. Yeah, it's still a descending triangle. It's still there, but it's hanging on by a thread. And if you do get this descending triangle completed, $6.5% for $450. There you go. Right? Where would that take us? To 62.50, and on a daily chart, that would be like here, 6,300, close enough, right? On a wick, it'll still be above this red line. Like I said, I don't believe Bitcoin is going below this red line. And if we make a new swing low and bounce off of it, I'm going to raise this line again. I don't think people will get to buy cheap Bitcoin anymore. Am I still bullish liver tube meat? Absolutely. My freezer is full of liver. I think I'm good for like 6 months based on how much liver is in my fridge, because all you need is a few 100 grams. And I mean, I'll lose some kilos, but I'll be nutritionally fine. All right, guys, I'm gonna get going. I am still bearish Bitcoin short term, very short term, but I am very bullish Bitcoin intermediate and long term. So that's my, I guess, TLDR on an 1.5 hour long video. Yeah, fake Bitcoin is going to have its halving in a few days. I'm already speaking with Jimmy Song to get a video up and running for that. All right, guys, thank you again for watching. And I will, oh, wait. Hey, support. You can buy videos. You can use the affiliate codes. I don't think this is going to come back. Nope. That was my Embly cards. You can come out. Hopefully, we'll all be flying and having fun in Bali, Indonesia, the first week of November, and in Malta, the first week of October, when this loads. All right, guys, that's it for me, and I will see you all on the next one. Once again, where's my Hyperwave book? Oh God, I'm already dropping it. Boom, right there. Came in the mail today. Leah, Tyler, and Tyler. Thank you. Socrates Tyler and Tyler Jenks. Thank you for this. Can't wait to read it. All right, guys. Thank you all for watching, and see you all on the next one.